I don't know about you, but I don't like spending all day in front of my trading screen. I want to have the time to do other activities I enjoy while having some trades in the background. So I'm revealing the profitable 1 hour trading strategy, and I will show you how I find the leading signals, how I know right at the beginning of the day if the market is worth trading or not, and all of this by spending just 30 minutes in the morning. Before we begin, if you want to show support, please leave a like to help us with YouTube algorithms, and turn on the bell so you don't miss the new videos our list. The speed of the markets and lower time frames represents big problems for many traders. All the trading decisions you make will have to be done much faster. One solution is this problem is Tradingview our time frame. The 1 hour chart offers flexibility, there is stability, less noise, and it also generates enough trades so you have lots of decent chances of the making money. This strategy involves finding trending days based on the certain pivot range leading indicator, and taking trades around the safe areas in the directions of the main trends. Using simple price actions, by the end of the video you will know right at the beginning of the day if you are going to trade your market, and you will also know the directions you will follow. If I have to name my favorite indicators, well, it's the pivot points. Pivot are nothing but support and resistance based on the high low close the previous day, and offers you a framework to trade on the floating pivot points on your chart. It will show you boundaries where price is likely to face support or resistance. Unlike lagging indicators, points don't change as you change your time frame. Once you plot them on your chart at the market opening, they remains there until market closes. In one more aspects, pivots are being used by big players. I came to know about the central pivot range concept after reading the logical trades by Mark Fisher. The SRP is nothing but the range of these lines, one above and one below the central pivot point of the day. The fundamental idea behind these indicators is that the particular day's trading range captures every about the market sentiments. So this range can be used to predict the price movements of the following days. How to read the price actions using the central range when the SRP makes higher heights, meaning the SRP is higher than the previous day. That indicates that the particular market is in the uptrend when the SRP makes the lower lows, meaning the SRP is lower compared to the previous day. This indicates that the market is a downtrend. As long as the price is above the SRP is generally known as the bullish day, and as long as the price is trading below the SRP, we are in the bearish day. Of course, this doesn't mean if you see the price trading above the SRP, you will go away by it. SRP is just gangrenous, and I will show you later how to filter and find the best signals, the wider central pivot range to the more difficult for the price break the area. This basically means that wider central ranges are more powerful than the arrow which SRP have. Look at this chart. This was a wide SRP day, and when price retouched to the area, it found support and was unable to go below it, and look at what happened when the S&P was narrow. The price broke on the both sides of the area, hunting stops, orders, and no clear trend during the day. Just sideways price movement and a lot of the consolidation. So if the SRP is too narrow, it's unlikely the SRP will offer a solid support or resistance area. Whatever the SRP is too narrow, I don't pay much importance if the price comes near it, because it can easily piece it, break it. So remember, narrow SRP doesn't much support or resistance. Also, when the certain private range is wider often, but not always, such days are range days, where price moves from one range to another through the day. Look at this example. We have a strong move upwards, so the next day the SRP was quite wide. We had the range day around this area, and remember, the previous row wide range means that it's more difficult for the price to break area. Another observations is that the narrow central point pivot range can lead a big trending day, and the wide central range can little quiet in the range bound day. In this example, you can see a very narrow range day which leads to the huge move during the day. Observe how the price was trending in the direction with lots of momentum, and of course after such a strong trend today. The next day was a wide range SRP with the sideways price actions. This is the efficient way to analyze the price, quite different from the classic price actions. There's another high probability setups, and that is the fresh central pivot range. Even only given day price didn't touch its SRP, it will be considered as the fresh SRP for the next coming 2 or 3 days. There's an example: the price made an aggressive move downwards, and the next day price actions didn't touch its SRP, so that was the fresh SRP and important area to keep an eye on from the next several days. Sometimes during the trading day you will see no candlesticks, instead the SRP, but only 1 or 2 weeks entering inside the SRP. This is also a fresh SRP and still a very powerful support for the resistance area. And here's a interesting fact: I found out there after my backtesting, the price represents a free SRP, and the opening of the sessions compares to the mid or late afternoon. So if the previous day was a free SRP and today the opening price approach the area, then the free SRP has the high chance to work as a strong support resistance if the price approach the previous day for SRP after the middle of the trading sessions, and the SRP isn't likely to work as the strong support and retouchments, and price can easily break it. Here's an example: we have the fresh SRP on the chart, and on the next day the market opens below the free SRP, touched it, and the area act as a resistance, and price immediately reverses. So the fresh SRP works as the strong support resistance at the opening, and less powerful during the second part of the trading day. Plotting the SRP or on your chart can give you a great edge if your trading SRP is also known as the head breaking of the market, while price is likely to change its directions most of the time. SRP is the powerful support and resistance area, so it's not a good idea to go short when the price is above the SRP because it will actually as the support area, and it's not a good idea to go long when the price is below the SRP because it will act as a resistance area. In the ideal of the strategy is so buy and sell the weight of the trend. One of the best ways to buy and sell the pullbacks is to the trend is to pay the bounds of the central pivot range, which the method may professionals use. Essentially, each pullback to the pivot range is the buying opportunity within an uptrend and the selling opportunity in the downtrend. How do I define a trend using the SRP? Very simple. If the current day SRP is higher than the previous one, we have a short-term uptrend. We look for the long entries above the SRP. If the current day SRP is lower than the previous one, we have the short-term downtrend. We look for the short entries below the SRP. This is an important conditions in our strategy. So the beginning of the day, the first step you need to take is to analyze the positions of the SRP relative to the previous day. If it's higher, you know that during the day you will be searching for the long entries. If the lower, you know that you have to short the market. If the SRP is wide, you know that the price will most likely find support or resistance at the SRP, but you will also be prepared for the ranging conditions. If the SRP is narrow, you can have the strong trending day, but at the same time the SRP may not offer much support or resistance. Using the 1 hour time frame, you remove the noise on the lower time frames just by looking at the chart at the beginning of the trading day. You will know what to expect. This is how trading should be planned and organized. Here are several techniques I use to filter the signals and to trade only the high probability ones. The first one is the classic trending breakouts, which is one of the most efficient strategies if trade correctly with trading connection consecutive higher lows and uptrend and concentrate lower highs and downtrends. The ideal is to use momentum of the trending breakouts to find the trades around the SRP area. The strategy here is very simple. If the price breaks down a trend line, SRP is higher compared to the previous day and the price is testing the central pivot range from the uptrend side and found the support, then you should look for the long positions. Conversely, if the prices breaks an upwards trend line, the SRP is lower compared to the previous day and the price is testing the central pivot range from the lower side and finds resistance, when you should look at the short positions. Here's the euro yen. We had situated downtrends, the third day uptrends and the trend breakouts that the price broke. This previous slide is found resistance at the lower central pivot range. The rejections came in front of the pin bars as the central pivot range was also lower than the previous one. The conditions when were met for the short positions. Also, this is the wide range SRP and we have already had the previous price actions returning to the zone. We know that during the wide SRP could witness some ranges to the short trade right below the SRP was also lined with the because the price already moved through the day stop loss goes above the SRP or above the central pivot points being the wide range, and you target the next beach slide or the minimum 1.5 reward compares to your risk. We have the uptrend with a 4 days downtrend corrections for consecutive SRP days. Here we have the first up central pivot range and the double bottom around this level. The next day was also on up SRP days with the price breaking above the trend line. This time the price managed to reach the middle level of the range. The central pivot points found support and continued its uptrend. Always look for the candlesticks formations to revert rejections. In the case it has the pin bar formed instead of the SRP. We also had a confluence with this slight high breakout which became support long above the SRP with the stop loss enters below the beam bar or below the middle SRP line, and your target the next slight height right here. The second strategy involves the HMO Google Cloud that will only use the convention lines or the 10 connect to the conventional lines will help you with the short-term prices momentum and also signals in the area of the minor support or resistance. If the market price is above the conversion lines, this indicates a short-term upwards momentum and you would want to concentrate on the buying signals. If the price is below the conversion line, this reverses the short-term downtrend momentum and you will want to search for the seeing opportunities. You also need to pay attention to the slope of the line and increasing conversations line, meaning an upwards slope indicates the upwards trend, decreasing conversations line, meaning downtrend slope indicates a downward trend. The idea of the fine zones with the central pivot range and the conversion lines close together area of the confluence. So if the SRP is higher compared to the previous day, the price is testing the central pivot range from the upper side and stays above the conversion lines. You look for the long entries if the SRP is lower compared to the previous day. The price is testing the central pivot range from the lower side and stays below the conversion lines. You look for short entries here and long entry. We have the upwards SRP day higher than the previous day, so we look for the long trades. The SRP is wide, so exact strong support. We also have two conversations line offering the support, and look what happened when the price entry zone in touch the conversations lines formed the pin bar and reversed. This strategy offers a lower stop loss. You could place it below the conversations lines or below the beam bars rejections of the area. You don't need to place it in all the way below the SRP area. And here's the short Tesla trades. We found a lower SRP days price is below the conversion lines in the downtrend momentum. At the opening of the session's price enters the central pivot range and attached to the pin both of the upper level and the conversion lines is immediately moved in the opposite directions forming yet another pin bars. The pin bars are my go-to signals, perfect for the strategy as there is the clear bearish pressure of the two short trades right after the pin bar. Stop loss above the conversion line, which is also above the pin bar in the SRP trades. The next slide. If and when price moves above the conversion lines, you need to be careful and close at least a part of your positions because the momentum is shifting to the other side. As always, if you got any value from this video, leave us a like to stay in touch, subscribe to the channel. Until next time.